Elon is under attack by his own shareholders. Elon responded to this before, but now he responded again with more detail. Ross says here, Elon has now erased $600 billion of Tesla wealth and still nothing from the Tesla board of directors. It's wholly unacceptable, says Ross, who manages $1 billion fund. First, Elon responded that Tesla is executing better than ever and that Tesla does not control the Federal Reserve. That is the real problem here. And now he has elaborated further, saying securities analysis 1-on-1 as the risk-free real rate of return from treasury bills approaches the much riskier rate of return from stocks, the value of stocks drop. That is obvious. For example, if treasury bills, which in simple terms, that is just bonds, you basically lend money to the government. That's all treasury bills are. And stocks both had a 10% rate of return. Everyone would just buy the former. Everyone would just buy treasury bills because it's guaranteed by the government. Now, looking at this reply from Elon, is this reply really... Is this all there is to Tesla stock being down? It's all about macro environment and higher interest rates. Is it really all just about that? I would say I have a hard time agreeing with that fully, but I do see fully where Elon Musk comes from. You see, if someone attacks me, and if they do it in a way where I see that we are not using full information, then I will shoot right back at them in the exact same way. So here's what's happening here. Ross is saying that Elon Musk single-handedly wiped out $600 billion of Tesla wealth. He is basically, and I respect Ross, by the way. Ross has a $1 billion fund. Great. I'm not picking a fight here with Ross. I'm just saying, this is what Ross is saying. Ross is saying that it's all because of Elon only, which I strongly disagree with. It's a lot due to Twitter, certainly a lot, but is it all of it? And there is a lot more drama going on, by the way, so you will want to stick around. But check this out. S&P 500 is in reddish color. Tesla stock is in blue. The arrows are all instances where Elon has sold Tesla stock. And as you can see right here, Tesla stock has gone up together with S&P 500. Now remember, Tesla stock is a lot more volatile, so it goes up a lot more and it goes down a lot more together with S&P 500. So until about here, which is where roughly Elon bought Twitter, until here, I mostly attribute the losses of Tesla stock with the macro environment, and also Elon selling certainly had impact, no doubt about that. But macro environment, I would largely blame macro environment for that. Now, after the Twitter deal closed, S&P 500, as you can see, it did not go down at all. Tesla stock just went straight down, and it's going down as we speak. So Elon is not addressing this drop here. He's not helping himself by not acknowledging it at all, perhaps. And look, both people here have very sizable, enormous interests that they have to think about. Ross manages $1 billion fund, so he has to look out for his fund. His fund holds Tesla stock. So it does make sense for him to say this if he wants to see a change, at least short term for sure. When Steve Jobs was ousted from Apple initially, Apple stock for the next few years, it skyrocketed. Only then to come plummeting down, and Apple was on the verge of bankruptcy, and then Steve Jobs was brought back in, and Steve Jobs revived the company, and not only did he do that, the stock just kept going up and up and up and up and up and up. So it does make a lot of sense why you would require or demand a change short term, because next 5 years probably Tesla perhaps would do even better if they replaced Elon Musk, or they made it very clear what's going on with the CEO. But 10 years from now, I don't think we would be in a better place. I believe we would be in a much worse place if we kick Elon Musk out from Tesla. So the initial reply from Elon, my assumption was that Elon was talking just about Tesla, the company, which probably he still was, maybe, perhaps. It wasn't exactly clear. But now, with this reply, it is obvious that he is talking about Tesla stock specifically. So that makes me think that this perhaps was also about Tesla stock as well. So blaming Federal Reserve, I don't know if that's a full picture. But I would still maintain my original position that this initial tweet was about Tesla, the company, because Federal Reserve, it does make Tesla, the company, operate. The conditions just become much more harder to operate within, because if people have to pay much more higher interest rates, and if the interest rates keep going up, and you have to pay double the amount per month for that same car as you did before, of course, that will have an impact on the demand for cars, especially luxury cars, perhaps, or any cars. So I still think this was about Tesla, the company, but clearly this is about Tesla stock. And Elon knows how to play the game. So Ross came at Elon with this, one-sided attack, maybe? And Elon responded in that same exact style, I would say, which does not make me really feel better as a shareholder, by the way. But would you expect Elon to say, yeah, guys, the Twitter deal? Yeah, that's why Tesla stock is down. Like, there's no universe where, or maybe there would be at least one universe where I would imagine Elon Musk actually saying that, because Elon Musk does say things that oftentimes do not exactly benefit him. But I would be quite surprised if Elon actually pointed out that Tesla stock is down since the Twitter deal closed, mostly because of Twitter. Now, there are other things that many other, especially many analysts are concerned about, or some analysts and some institutions, and that's specifically what's going on in China right now with Chinese economy slowing down. There are questions about demand in China. There is no more backlog in China at the moment. And I do have to say something rather obvious. If I am a customer, I don't want to wait. No backlog creates a better experience for a customer. Now, I am concerned about an investor experience as an investor, right? As an investor, I want the backlog to be as huge as possible. If you do have a huge backlog, then I want the prices to keep going up till we manage the backlog at, let's say, 3 months, maybe. That's what I would like to see. Ideally, it doesn't create a good customer experience, certainly not. But it makes it completely obvious that demand is extremely strong. Now, Tesla is charging high prices right now, so there is a lot of room to cut down the prices, and I believe once they cut the prices further, if they need to, Tesla is going to be fine. But in China, Tesla better starts working on that cheaper car, and I'm sure they already are. We just learned that Tesla has been working on Tesla Highland, which is basically a refresh Model 3, it appears. Tesla has been working on it for like 6 months already, and I'm pretty sure Tesla is working on the cheaper model as well. If they are not, what's going on? Tweets like this from Elon Musk do make me feel quite a bit better, and I think most of us as well. Everyone focusing on Tesla while most other automakers are on the doorstep of bankruptcy. Elon Musk replies to Farzad and says, much closer than they realize. Hopefully Tesla never gets to bankruptcy. Nowhere near even close, I hope, ever, as long as we have Elon Musk. I don't think that's going to be happening. I think Tesla economist is much more closer to the actual number that Elon has erased from Tesla's market cap recently. When it comes to just Twitter shenanigans, I think Tesla economist is much closer than Ross here. But I do understand why Ross is saying that, because if you want to rally the upset Tesla retail stock investors and you want some sort of action to be taken, then you say Elon erased $600 billion of Tesla wealth, not $250 billion, which is probably a lot more accurate. And Ross is saying that Elon is acting a little bit like Steve Jobs. There is definitely some truth in that, for sure. It is important to point out that Ross overall loves Tesla and overall does support Elon. He is just not okay with what's going on. And here I will respectfully have to disagree with Tesla economist. Tesla doesn't need a $30,000 car and they don't need to compete with BYD, says Tesla economist. In China, Tesla will be competing with BYD. And if there is a very bad recession that we will go through, remember in China, Chinese consumers, they buy the cheapest Model 3 and the cheapest Model Y. That's where most of the sales are. In the US, that's not the case at all. Most people buy the more expensive trims. So in the US and possibly in Europe, we don't need the cheaper car. In China, if Chinese economy just goes down the toilet, oh, we will need that cheaper car if we want to still keep growing tremendously. If Chinese economy it proves to be resilient and there's no recession and economy is strong over there, then for the time being, we can get away without that cheaper model, I believe. But eventually we will need it. And the team in China is extremely smart that runs Tesla. So I am sure they have already made all of the moves that they see that they need to make. But because of the $7,500 credit in the US, which will last for many, many years, in the US, we don't need that cheaper car at all for a long time. I'm just talking about China specifically. And just to clarify specifically why I think Tesla needs a smaller or cheaper model in China specifically is because Giga Shanghai used to export a lot of cars to Europe before, but now with Giga Berlin ramping, Giga Shanghai will not need to export cars to Europe later anymore. So you will have a lot of supply that used to go to Europe, and now we will dump all of that within China or Asia, and there's only so much product that we can dump within China specifically at these specifically high prices. In China, Model 3 right now is 266-ish thousand RMB. Now note that there are subsidies, but then also Tesla offers an insurance discount and then another new discount. So let's just, for simplicity's sake, let's just take this number right here. So in China, you can get that Model 3 for $38-ish thousand. In the US, it's almost $10,000 more. Now, there is a temporary discount, which I expect to completely go away once the $7,500 EV incentive is going to take effect. Tesla will sell every single car it produces, but the question is at what prices? So in China, at $38,000 per Model 3, seems like there is no more backlog. Tesla certainly still has room to lower prices quite a bit in China. Look at this right here. So the exported cars are in red, and a lot of these go to Europe, which very soon they will no longer have to go because Giga Berlin is going to be scaling up very nicely. So all of this red, for the most part, not all of it, but a lot of it, will no longer need to go to Europe. They will still go to Australia. They will still go to other countries in Asia. but many of them will now be able to be delivered within China. So you will, almost double the supply of vehicles. Almost, not exactly, but sort of. And during this time, remember that generally speaking, the demand for cars overall has been pretty good during this time. If we enter a bad recession, that will start to change. The problem in the last few years was automakers could not produce enough to satisfy the demand. There are, of course, many other things that Tesla is able to do. Perhaps they have a lot of tricks that they haven't showed us yet to reduce the costs of producing the vehicle. So we will want to watch carefully what is happening with auto gross margins to Tesla in the next earnings report. Tesla in China is only using rear piece castings for Model Y only, and they're not using any castings, any Giga castings for the Model 3. And we don't have a front casting in China yet. So there's a lot of room to still reduce the cost, and that will keep us going for a while. But we do need to work on that $30,000 or $25,000 car eventually. And remember Rob Maurer from Tesla Daily reporting on the production cut? At that time, it was a rumor. It will be quite telling once we actually find out, was there a production cut indeed? Was it because Tesla was upgrading the lines? What are the margins going to be now after all of that, even at these reduced prices? Maybe these price reductions somehow will not be cutting into margins at all. In that case, Tesla can just drop prices quite a bit of Model 3 and Model Y, and the demand will be very strong. This is all, of course, what I think as a conservative investor. I want that red part, which is the backlog for China, I want that to go up to a point where we have a backlog of 1 month or 2 months, preferably. And if you don't have that, then I would like to see that cheaper car released soon. And because Elon Musk said that Tesla is executing better than ever, I don't see anything to worry about. I'm sure they have this handled just fine. And here's a chart that shows BYD sales in China specifically only, and Tesla sales in red. This is battery electric vehicles only, so no hybrids here. And as you can see, BYD in total number of cars sold, keep in mind that their cars are very cheap. So this is just the number of units. This is not revenue, neither profits. Tesla pretty much has all of the profits in worldwide when it comes to battery electric vehicles, which is probably the most important thing. But we do have to really look at BYD carefully within China specifically. They are capturing that cheaper end of the market, and I would like Tesla to work on that cheaper car as well, so that Tesla can be number one, not just in the high-end luxury vehicles in China, but also when it comes to economy cars as well. And I am convinced that Tesla sees that data as well, and they have a good plan for that. These are 48 reasons why I only own Tesla in my stock portfolio. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.